Hello, everyone. Welcome back to another enlightening session of our weekly price action based technical analysis series. In this video, our spotlight is on the gold commodity. I encourage you to stay tuned in as I guide you through my perspective on the current market structure ahead of the new week. Before we embark, it's important to stress that this video is purely for educational purposes. Our goal is to offer you valuable insight into the XAUUSD chart and at the same time enhance your proficiency in price action analysis. Remember that trading financial market involves inherent risk. Always consult an independent financial advisor to assess your unique situations before making any investment decisions. As we gear up for the week ahead, I have conducted a comprehensive price action based technical analysis utilizing simple fundamental tools such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of this market. The prior week's trading setup ushered in captivating selling opportunities. We capitalized on the US dollar strength and secured over 500 pips of price movement as demonstrated here in this commentary. In fact, the entries are detailed right here. So if you are keen to review these commentaries for educational purposes, you will find the link located in the description box below or at the top right hand side of your screen if you are watching from my YouTube channel. Now, let's dive right into the business for the coming week. Well, if you look at the structure closely, the gold prices gained some positive traction on Friday. However, considering strong macroeconomic data from the US, it is prudent to wait for strong follow through buying signals before confirming that the US dollar has formed a near term bottom to place bullish bet. Well, from a technical standpoint, I will be focusing on the 4 hours time frame where we have a simple setup to guide our trading activity for this new week. And of course, what I did here was to take into consideration the nature of price action since the beginning of this month. And it is quite clear that price action has been very bearish. After connecting the series of lower highs here, I was able to identify a couple of trend line which of course we are going to be using to guide our trading activities for this week. So we have trend lines here, and you know how we use our descending trend lines in this community. As long as price action remains below that descending trend line, we have no business buying that particular asset. Now, with this case scenario we have on the XAUUSD, are we going to continue selling this asset this coming week, or are we going to be getting ready to buy? Well, if you look at the structure, what I did was to zoom into the nature of price action in the later part of last week. I think the second half of last week to be precise, and I have a couple of trend lines here, which we shall be using to guide our trading activity for this week. Now, look at it. I have the 1,896 level. As you will see, it has been a major determinant of price action since Tuesday. As you will see, that level was holding by pressure at some point before it was broken during the midweek and throughout the second half of last week's trading session price action had remained below that area to further emphasize the strength of the sellers around that juncture. And considering the fact that price still remains below that descending trend line, it makes it all look more bearish at this point in time. However, if we take a further step down to see how the market reacted to the lowest point, which is at the 1,885 level, we saw buy pressure resume around that area. Now, despite the strong bearish momentum, we have noticed here that sellers continue to struggle as soon as price got into the 1,885 level. And in fact, we have an higher low here as price action was unable to break down the previous low, giving us signs that buyers may likely be building up some momentum behind the scenes. Now, with this information we have gathered here, it is quite clear that this range that we have here has a tendency of transitioning into either a trend continuation pattern where a breakdown retest of this 1885 level will be welcoming selling opportunities, and of course a breakout of the resistant line at the 1896, which of course would have also broken out of that descending trend line, would be a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt, hereby giving us an opportunity to join a bullish move. So it's a very simple setup here on the XAUUSD. So our center of focus for this week will be between the 1896 and the 1885, where depending on how price action breaks out of this level is likely going to be giving us a signal of where price action will be going. And of course, while we look at things from a technical standpoint, we also want to keep tabs with the fundamental aspect of the market. And of course, by checking the economic calendar, we know that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. So, on the economic calendar, we shall be focusing on high impact event from the US economic docket. Anything here has a tendency of influencing the market dynamics. So, for the first high impact event for the week comes in on Wednesday, August 23, and that is the S&P Global Manufacturing PMI. The Purchasing Managers Index indicates the health of the manufacturing sector, and a higher reading suggests expanding economic activities, offering insight into overall economic growth and potentially influencing trading decisions too. The S&P Global Services PMI comes in on that same day, and of course this gauges the well-being of the services sector, and a higher reading signifies growth in the sector, providing a window into broader economic health and influencing trading strategies accordingly. Then on Thursday, August 24, is the Jackson Hole Symposium. This is a significant annual gathering of central bankers, economists, and financial market participants. It offers a platform to discuss critical economic and monetary policy issues impacting market sentiment, and also will be guiding our perspective as well, depending on how participants in the market anticipate this event. Then on Friday, we also have, of course, the Fed Chairman's Powell speech. And the Fed Chairman's Powell speech is also very important as it holds considerable influence over the financial market. His remarks provide insight into the central bank's outlook on the economy, potential policy shifts, and interest rate changes impacting our decisions too, and of course, the market sentiment. So it's a week jam packed with high impact event, and of course, the anticipation of this event will definitely reflect on the chart as price action. Now, talking about price action, our center of focus basically for this week is within this area. And trust me, I will be with you in the comment section after monitoring our participant in the market will be reacting to this particular structure during the early hours of the week to give you an idea of where I think price action is likely going to be going. If you have found this content helpful and useful in making your independent trading decision for this week, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.